Good morning, everybody. Welcome to today's episode of Market Check. You guys know me as Snorlax, also as Tommy. I'm joined by Max Tucker and Dr. Will's Outlook. We have this loading screen that lasts about 30 seconds before we go live and has just like this catchy music. And it takes like all of my being not to just kind of like groove and dance around to it. But I'm always cautious, like, oh, am I going to be dancing by the time we get on air? Are they going to like speed up the countdown to mess with me? But that's neither here nor there, guys. Happy Friday, depending on your perspective. Hope everybody has had a great week of trading during this, pretty horrendous job, right? There's been some small opportunity, I think, intra-week, but as a whole, we really haven't gotten our trending move yet, right? It's kind of, to chop or to trend. And one of the things that we've been talking about that we were looking for specifically from Bitcoin in the crypto market was some sort of move higher to grab liquidity. I know Jack has talked about it as well on our show yesterday, and we got just that, right? We ran 16.2. I think we got as high as 16.5. So we officially ran last weekend's highs. That's always big for me because I like to say that I don't think weekend traders should ever have stops that remain untagged. I remember making that comment on Monday or Tuesday to you guys earlier, but we did get that move. And so I think the question for me is, does this, kind of play out similarly to a lot of the BARTs that we've seen this year where, you have to have that squeeze pump, the BART, and then the momentum carries you through support. Are we there yet? I'm not sure. I think we could still see some more scammery in this range, truthfully. But we are getting very, very close to kind of that window of time that we have talked about repeatedly for both lunar confluence. We have a little bit of weakness in equities right now. And it could be debated, right? Equities, whether or not they are willing to climb to all-time highs from here. I think we still need a little bit more time before we can deduce, if that's likely or not. I know we can put together very good bullish and bearish arguments for equities, but crypto right now it just looks more dead, more clearly defined, more clearly rolling over. And I wouldn't even say from that perspective, I would just say I think I'm more confident in crypto selling off than equities based purely for liquidity reasons. And one of the reasons that is driving factors of liquidity right now is the yuan, which actually overnight made an all-time low against the dollar. Definitely want to talk about what's going on in China again during this show, because I know, we had that huge gap up on the HSI 2 weeks ago on the news that they were basically forcing banks to be buying back stocks. And, so far it looks like as though it had that initial effect, but it's not enough to save the market, which is kind of what I expected. Will it continue to bleed into equities? Will it continue to impact crypto market liquidity as far as altcoins go, right? And then I definitely too want to talk about, because Will highlighted it, I think earlier in the week, sometimes we don't talk about Ethereum as much as we should. I want to talk about the bull and bear case for Ethereum, because I was kind of thinking about it, and I don't want to get on a little soapbox to start the show, but what is the bullish case for Ethereum in the short term? I'm trying to think about it because the most bullish catalyst at this point for the crypto market would be Bitcoin moving aggressively higher, not Ethereum. So what exactly is the scenario that you see Ethereum start to skyrocket from here without potentially, more influence from QE? But all that and more, guys. We got a big show. It's Friday. It's a big week. I thought it would be a bigger week than it was, but it's going to be a big month. I feel pretty confident saying that. But with that said, I'm beyond excited to get into the back half of this month. Let me just say, I don't like to be impatient, but that's almost kind of bordering on what it is, because I do feel a certain level of conviction towards direction, how it's going to play, potentially, the timing of when it's going to play out and how it might look. So I'm just kind of ready for it to be painted on the chart, right? But good morning, guys. I would love to get your thoughts on the market, your thoughts on this little pop that we've had in equities, that BART that we had overnight in crypto. The fake, then there were rumors going around yesterday on Twitter when we pumped like 1% that BlackRock ETF was going to be approved, even though it got like, what's the word? Postponed like last week.
Mm-hmm.
So, yeah, gotta love CT, man. Never change.
I mean, people they just can't help themselves. I
Mm-mm.
don't even they just don't get it, man. They're just I don't know if it's like they're gullible or they're literally like mentally ill, but
Max, rumor on the street.
yeah, right. Yeah, Will sent me one. It was like rumor on the street is BlackRock already got approved. It's like no, like that's not how this works. Like there's not like any rumor on the street, man. Like yeah, we're all confident that BlackRock's eventually going to get approved for one, but yeah, I promise some like goofball on Twitter didn't like hear from his buddy that BlackRock got approved and has some inside scoop at some federal agency. So I don't know, man. It doesn't, all that is a non factor to me because look, every pump that we've had after the, original spot ETF is coming pump from 25 to 30 that we had was that like month and a half ago now. Every subsequent bullish ETF piece of information that we've had has been more muted. I'm actually convinced at this point that if a spot ETF got approved, we would pump and then just BART. I think that like the knee jerk reaction is excitement. And then people just go, oh, wait, why are we bidding? Like people aren't just going to suddenly like dump $1 trillion into Bitcoin yet.
We
just
just
because
do
you
that
can.
again. Yeah.
Just because you can doesn't mean you will. It's a vehicle. That's great. But I think the biggest bear case I've had for the ETF, I mean, one, you're getting in bed with some dirty people, man. You're getting in bed with some people that, I mean, they are known for crushing markets, and cornering markets. So that's a little scary because Bitcoin could be cornered very easily if you had the resources that some of these firms do. But beyond that, I mean, it's like if they've wanted to buy Bitcoin, like you're telling me that like BlackRock hasn't been able to buy Bitcoin all this time. Like they couldn't figure out how to do it. Like they couldn't figure out how to custody their Bitcoin. I mean, come on now. Like let's just be realistic about it for a second. Like the ETF's going to be big in the long run. That's great. When conditions dictate more capital, fresh liquidity being onboarded into Bitcoin, I could see some people dabbling in it. But who right now is going to be like, this changes everything? My $50 million liquid net worth stock portfolio, that I've spent my entire life accruing and, diligently saving and investing is all going into BlackRock's new ETF. It's not going to happen. Just because you understand it, just because you believe in that paradigm, doesn't mean that, $1 trillion of liquidity also agrees with you. They will come. But again, it's going to be more dictated on market conditions rather than just the vehicle is there for them to jump in. So I don't know, man. I don't even know why we're still talking about it. I just literally wasted 5 minutes talking about this. That I shouldn't have done. Someone should have cut me off, man.
It's because the rumors on the street.
Yeah, rumors on. You know who lives on the street, Will? Tell him who lives on the street. Tell him.
People with no money.
Crackheads and people with no money. Yeah.
The wolf of your mom's basement.
The wolf of your mom's basement.
Yeah, right.
Okay, wait. Real quick. This is all Tommy's thing, but Tommy, I don't know if you look back at the last time we had an autumn equinox shortly followed or shortly.
Tommy is our in-house Marin, man.
Shortly preceded by a whatever kind of moon that is in a pre-having year. I mean, come on, man. I mean,
yeah, man. I mean, there's just like so many things.
I mean, dude.
I won't go like too deep into the lunar thing, but
no. Go deep into it, Tommy.
No, we can go deep. Yeah, we can
go really deep.
Rumor on the street is this?
Look, you got the new moon on the 14th, and you got the harvest moon on the 23rd.
Oof.
The new moon is going to, it typically signals change. And in crypto, it has traditionally been a bearish catalyst, new moon specifically. And harvest moon is typically, it's you're harvesting for sellers ahead of the autumnal equinox. Like that's usually what it means. So sometimes it plays out, sometimes it doesn't play out. There's a reason I've had these kind of marked out on my calendar, though. I do think, given the headline risk that we have, I'm going to keep just harping on that. we have some entities that they're vulnerable. I think that's the best way to put it. And it's a market that has a history of making sacrifices. Look, I mean, you don't have to tinfoil hat it with me, but I don't think you can rule anything out in the month of September or October. And I think a lot of it has to do with the lunar confluence. There's more beyond that. I mean, kind of into the end of September, I think there's like multiple planets in retrograde, whatever that means. I don't know what that means. I've seen Marin mention that though. I assume it's significant though that we have so many. So, I kind of feel like if you can survive September and October from a downside perspective in crypto, you're probably doing really well.
Yeah. I want to point out too, like I think a lot of people get confused when they come to the show and they're like, oh, they're talking about dumping again. It's like, you got to understand, a lot of the time we're talking about trading. Like we're still, at least in my case, still accumulating even in these ranges. You just got to do it in an intelligent way. You can't be like, oh, I have no dry powder left, I went all in here. Like it makes literally no sense to say those type of things. From a trading perspective, I think a lot of people are short bias right now. And some of you may be like, well, then that means we're going to go up. I don't mean in general. I mean like the people that know what's going on with price action. I would say there is still the bullish case to staying above 25K. Yeah, I definitely am in the camp of that. And I've said that many, many times. It's like, unless you come down and you violate basically 25K, you have good potential to hold here. And we haven't done it yet. We just haven't done it. And a violation could just be a wick in too, right? I would expect that it'll hit 25. If that's the case, it'll probably bounce off of it. And at that point, you already know that short's in, right? These scam whips are so obvious that, if you can't see the move, I don't know what to tell a lot of people, right?
Will, how do you play this chart right here?
I just think it's a move above that's going to come back below, right?
Well, it's inverse, damn it.
I know it's inverse. and what the reason I state that is because these are traps that continually keep getting set, right? Is that it looks like they're baiting bears. It looks like they're baiting bears. And that's what people are thinking, right? But the reality is they are moving towards the bearish side. You have higher lows at their higher lows right there on your chart, right? Just like you would have, lower high after lower high if that were inverted the other way.
Slow grind into resistance.
Slow grind into resistance. And as soon as you get ground into that resistance, eventually that resistance breaks, right? And same thing with support. If you were to flip that up the other, you don't have to invert it to convince me. The whole point is,
yeah, if you sit there on support, man, that's not.
You sit there on support, continue to retest. That's not bullish at all. That means that you are grabbing liquidity and then swiping up at higher liquidity, and then coming back down, grabbing liquidity and swiping up at higher liquidity. You're working out all the liquidity in this area, right? That is not with the intention to go up. Typically, that's usually with the intention to go down, to do a markdown phase, right? So every markdown phase has to be equalized. So a lot of people don't understand what that means. But basically, you come down to a certain liquidity zone, and the market maker has to recoup the losses they took on the markdown, right? And that's your sideways accumulation. Then the market maker from that position decides, is there more liquidity above or is there more liquidity below? Arguably, they marked down because they didn't think there was any more liquidity above. So that means a continuation pattern is more likely, and you'll probably get another capitulation, aka markdown phase again, right? Usually a market that marks up 3 times will mark down once to twice minimum, right? So we'll probably see another markdown phase before we see a mark up phase. And people can look up that exactly what I'm saying, mark up phase and mark down phase, because they work in tandem. I see you want to say something, Max?
No.
Oh, okay. Like you want to jump in there? He's like,
I mean, I got a lot that I want to say. I got a lot that I want to say, but you finish, Will.
But
video.
Yeah, I mean,
sorry.
No, you're good. You're good.
Super random.
With the markdown markup phase, I think that's some very important context, and I do want to touch on rates. I feel like we don't touch on that enough too, right? And the potential, because I think both scenarios, soft, quote unquote, drink the Kool-Aid, soft landing, and non-soft landing, something capitulates before we get to our target, are both innately bearish. I mean, I don't know. What's your guys' thoughts on that? I kind of touched on a little bit in the Giga chat this morning, but
I think a lot of people have derived what they think is an edge based on this year, purely on the fact that they've made money, probably fading the popular belief. And I think that time is over, personally, because if your whole shtick is essentially like a contrarian trading thesis, eventually you're going to blow yourself up because you're going to misread the situation, or you're going to die on the hill of stubbornness. Mm-hmm. So I think, taking that away, I do think that people see, that they see the timeline get really bullish, or they see the timeline get really bearish. It's really just kind of it's ultimately just going to be confirmation bias for your own, I think, directional take. I think people are kind of coping both directions. Like if you're bullish, support is holding, you're bleeding into support, you're squeezing bears. It looks like summer of 2021. I disagree with that personally, but you're allowed to, have a contrary opinion, right? Bears, vice versa, same way. I don't know. I mean, it just kind of feels like people have like chosen a group of others that they have chosen to fade, and now it's like become personal almost to an extent that they can't even see the market clearly anymore.
There you go. Yep, exactly. People have literally taken the market or taken individuals that they may have followed or seen before and taken it personally. And that's how people take it with us. It's a lot of the time. That's why they're like, "Oh, you guys are just bearish," blah blah blah. It's like you're taking what we're saying out of context. You're taking it personally. We're not coming in saying, "Hey, hammer the market down because that's what we want." We're saying, "Hey, what we see is the market might get hammered here."
It's just interpreting the data is all it is. Like, yeah, there's definitely emotions in trading to a degree because, I mean, it's exciting and it can be fun, and it's also competitive, but I mean, largely what we do is we're just narrating and interpreting the data. There's really not a lot of room for subjectivity. Yeah, you could interpret the data differently, but there's no reason to, take anything personal. I mean, yeah, we're all super bearish here, but it's because the data is dictating those emotions for us.
Well, yeah, it's people like, if you're bearish, you're like saying if they hold whatever asset you're bearish on, you're basically saying you will lose money. Like they take it as like you will lose money soon, and that elicits an emotional response from people. You know what I mean? That's why bears get attacked so hard, which is funny. But no, I agree with Tommy. I think all the contrarians who said no recession, up only for the last 3 years, even, right? And we're totally wrong in 2022. I think, they were right for the first half of the year. You know what I mean? Like that. And I think that emboldened them. And now they're just going to think that they're constantly right and that we're going to go much, much higher from here. And I think they're going to be wrong.
Here's what I've always said. Like, yes, there was a very small period or window of time where you could just have the luxury of ignoring everything and just bidding, and it almost became like a meme where it was like the again, don't mean this in a bad way, but like the dumbest, least experienced market participants were doing the best. There was like a meme to like make fun of all the guys that were studying this thing and have 3 or 4 decade long careers, like analyzing these high time frame trends. And you've got a bunch of like goofballs trading on like, some dumpy exchange with $250 that have 10x their portfolio this year by just aping into something that's random and being like, oh, like where's your recession? And like, oh, like everything's amazing. Like you just have to bid, like just making fun of these guys, these like seasoned professionals. And I mean, I remember this was part of that conversation I had with you, Tucker, where I was just like mad. I was like, dude, like this just can't go on much longer. Like this cannot happen. Like there's an imbalance in nature right now. Okay. You have these guys that have been trading and navigating markets successfully for decades, getting smoked by a bunch of people that just refuse to acknowledge some of these like really serious signals that are flashing risk off. And I said, dude, eventually the day of reckoning will come where all of this stuff, all this very serious risk off stuff that's flashing is going to matter again. And all of the people that have laughed and mocked at all of the seasoned professionals, they're going to get smoked. They're going to give back all of those gains. It's nature, man. Nature needs to reset a little bit. And it's nothing personal, but it's just like you can't just navigate markets under the, under the idea or the guise that nothing matters, just bid everything. Like that will only get you so far for so long. There's a small window of time where it can work and you can do very well. But the unfortunate reality is navigating markets are very difficult. And some of this stuff does matter, and it matters a lot.
Well, wait, real quick. Those, I mean, technically on a long enough time frame, if you just blindly bid the S&P 500, you're gonna be pretty well. You know what I mean? Like on a long enough time frame, it does work.
Tucker, on a long enough time
that's
frame.
That's literally what Warren Buffett did, bro.
Hold on.
Buying the S&P 500 for the last 60
years. That's what I was gonna say.
Quant AI genius. He's just
in a long enough time frame, you can buy a 401k or an IRA and make out on it. Like these are all I'd almost say nuances that are not going to make you rich, but they're intended for your average retailer who has no clue how to invest.
Well, no, right? Yeah, the Warren Buffett strategy does not work anymore. Like if you were buying the S&P in 1940, you're going to be loaded. Like it's just it. I don't know why it pisses me off that everybody thinks he's just a genius. It's like,
well, people still
the longest. Like
people still go to him for information. They do.
And like one of the richest guys who ever lived, Tucker. I mean, come on. Why would people think that?
Dude, if I was aping the S&P 500 every day for the last 80 years, I'd be loaded too.
You know why you couldn't have done what he did, Tucker? Because you draw too many damn volume profiles on it. You'd sell too early. That's why.
Yeah,
he's got diamond hands, baby.
That's what people would say. That's what people would say. But again, I think like people don't factor in compounding liquidity, right? They never factor that in. If you're early to something, you will make out. If you are late to something, you are distribution. That's what you are. Even if there's upside available for you, you're still distribution. Like you have to understand when something is too heavy, too weighted in liquidity to the point where it's just not worth your investment. If you're looking for growth, right? Arguably, I would say that's a very valid position to take. And like I like to take risk. I do. But I don't like to take risks that are going to completely obliterate me, as in like saying, hey, I put everything in at this price zone. Like I'm not willing to do that. I DCA in, I DCA out, I DCA in. And I can tell you compounding that way makes a lot of sense.
Hey guys, something really crazy actually just popped up. I just saw it. We only have 17 likes on this video, and that's a serious problem. That's a serious problem. We got to get to 20 likes, guys. Happy Friday. 24 people watching right now. If you are enjoying the content, please consider hitting that like button for us. It really is helping the channel grow. Really helps the robot at YouTube take a liking to us. So let's see if we can get to TP number 1 of 20 likes on the video. And then, maybe once we take some profit and we nibble, we'll see if we can get to 30 likes. But guys, thank you so much for being here. We got 28 people watching now, and we officially have over 20 likes. Thanks, guys, so much. Tommy, you were going to say something.
I was. You guys know what you've been describing over the last 5 to 10 minutes. You can sum it up with one word: conditioning. We have conditioned the herd all year into believing that this is the new regime. And maybe it is. Maybe it ends up being the regime for a little bit longer as far as equities go. But it seems pretty apparent to me we're getting pretty close to the time where you need to find a seat. Right, the music is about to come to an end.
Are you talking about crypto? Are you talking about crypto, Tommy?
I mean, probably both. I mean, crypto leads equities by a few weeks, a few months. It's going to show the cracks a little bit sooner than the American equity market. But what the music stopping looks like for equities is kind of TBD still, right? That might just mean sideways for a few months.
I'd like to touch into rates. I know we were talking about it a little bit this morning. I mean, I'm of the opinion of a soft landing is not a thing. I can give my perspective on that, and I talked about it in the Giga Chat this morning. I I can give you two scenarios, and then you guys can give me your perspective on your own. But like, scenario A is something snaps before we get the 2% target. Fed cuts rates, starts to try and ease into it. Scenario 2 is everybody thinks it's a soft landing. Fed starts cutting rates. We'll basically say inflation goes well beyond the 2% target, ends up in the 1% or negatives, and we start going into deflation. And the Fed is wrong, right? Completely wrong. And then they start trying to stimulate again. Both ends get stimulated, but before you see upside, you see massive downside. I mean, I don't know what your guys' perspective is, but like those are the only two outcomes I can see. I see no soft landing. I think people are drinking the Kool-Aid on that.
I mean, I think this would maybe constitute a soft landing I'm kind of viewing it in two parts from the equities perspective, Will. So I'm viewing it like last year we had a bear market, and that bear market was induced by fear of, maybe an initial overreaction to an aggressive tightening cycle. Not that rate hikes, not that they shouldn't be, not that they should be ignored or anything like that, but I mean, clearly anybody that understands this stuff, that it takes years potentially for these rate hikes to actually be felt. So it was the knee-jerk reaction to something that we hadn't felt in decades, okay, which was a very aggressive tightening cycle. So I view that as like a knee-jerk reaction of last year. I think that the next markdown is going to be actually feeling those rate hikes. So the first drawdown, the bear market of last year, was the anticipation of it, the knee-jerk reaction. It's going to happen. And then we go, oh, wait, we're not going to feel them yet for like a year. Let's just bid this thing back up. But this next leg down is going to be the actual one where we do see people losing their jobs. We see initial claims up at 300, 320, 350, and then we start to see unemployment creep up above 4%. People start losing their jobs. Businesses can't service their debt. That's when we actually feel the effects of the tightening cycle. So, I mean, I can't even remember what you asked, man. I'm sorry. What were you at? It was something around there, right?
No, so I was talking about, either hyperdeflation or something snaps during the downfall of inflation, and we still see hyperinflation. Both ends of the curve lead to not hyperinflation, but hyperdeflation.
Well, it's a lose-lose, right? Like they're both terrible, right? Either we get a second wave of inflation, and that's horrible. That's horrible. They're going to have to continually like hold rates high or even over tighten and then really break something, or we enter a state of deflation, which is horrible for risk assets. So it's sort of like they're trying to thread the needle, or people think that they're going to thread the needle. But yeah, I mean, it's a lose-lose in either one of those situations.
Yeah, I'd tend to agree on that. I'd like to lean into SL's comment a little bit. And I think this is just the normie thing to say. You can't out trade holdings. It's been proven over time.
Well, I think that applies to equities a lot more than crypto,
but
in my opinion.
I want to kind of give a contrarian approach to that. I would say a contrarian approach to that would be if you are on a 40-year span at this point, you probably cannot out trade that, right? If you got a far out outlook, you're like 20 years old, you're looking at your retirement at 60, you will beat a trader, right? But if you're looking at a 5-10 year span, I would arguably say a trader will outpace any investment out there, any investment vehicle, unless you hit a lottery, right? Like a Tesla or something like that. If you hit a lottery, sure, you can outpace a trader. But I think like with compound and everything like that, like, and when I say compound, I mean how much liquidity exists in the market, how heavy weighted stocks are now, and how much money it takes to move them. I don't think that in any type of short to mid period you would outpace a trader. I think in a long term, and that's what they're typically talking about is long term, you will outpace a trader, right? But mid to short, you will not outpace a trader. There's absolutely zero chance, at least not a good one, right? Not a good one.
It's all about time frames, right? I mean, investors are probably going to win over a 50 or 60 year time horizon. Traders could win, over like a 10 or 15 year time horizon. If are markets stagnant or are markets going up in real terms? I feel like that's what it comes down to. If markets aren't essentially in a high time frame uptrend in which they've already broken out of a range or broken out of value. So for example, we ranged in the 60s through the 80s for like 15 years. If you were holding assets during that time, the real value of your assets got incinerated. But if you were trading and you can trade effectively, you probably made a killing because the swings in the stock market over that 15-year period were insane. But after that period was over, you had basically a 30-year expansionary phase where it really paid to be an investor, right? And you see the same thing play out post 2000, post tech bubble. You have the range for essentially 7 or 8 years. You break out of the range and you melt up for 13 to 15 years. Like it's all cyclical and it's all about timing. And I think the most important aspect of being a trader is that it gives you the skill set to be able to kind of recognize which regime that you're trading in, or maybe not recognize it 100%, but to have a pretty good idea of, the type of conditions that you're seeing and whether or not they're favorable for, thematic investing over a multi-decade period or, over a shorter time frame. But I will say, I think 2022 was a bit eye-opening for a lot of people as well, myself included, never to be fully out of the market just because you're thinking with a trader's mindset, right? You're never, because even if you think you know everything, you don't. You're never going to time every single market swing. So if you have no exposure and markets start moving higher, like you messed up. Like that's a fact.
Yeah.
And that's no matter how much value you might have saved on the way down, if you don't have any exposure on the eventual bottom or during the reversal, that's a mistake.
I want to lean into that a little bit because again, he SL stated, bro, 97% of traders lose. It's actually not a factual statement at all.
Nice.
I would say probably about 95% of traders are not profitable, but not lose, right? It's usually about 5% win, 5%, 5 to 10% break even, and then the rest lose. That's your percentage. And yes, that is not a high likely favorable to traders if you're a new trader. And the reason that most traders lose is because most traders are not traders. They're retail trying to be traders. That's the key difference between the percentage there. It's a huge difference. If somebody actually took the time to sit down and understand charts and understand markets, you could become a trader very easily. I think in a lot of ways, I don't even think you need that much intelligence. You just have to understand patterns and how things move.
There's a time to trade, man. There's a time to trade and there's a time to invest. And I think it's really useful to at least have a basic understanding of both. Like post Bitcoin halving, I don't want to do much trading, truthfully. I really don't. Like I'll have a trading account and I'll navigate nimbly, but my plan is, at least my hope is that I put myself into a position where I don't have to do much trading because I can position myself on a 1, 2, 3 year basis. And I mean, I'm sorry, like you could be one of the best traders in the world. You're not going to outperform a crypto bull market by just holding spot at the right time. You're just not. You're going to make, you could 20 or 30x your entire net worth by getting yourself positioned appropriately in spot at the right time in crypto. And you might actually cost yourself a lot of money by overthinking it and over trading. So yeah, I'm trading right now, but my hope is that I can get positioned within the next year and become an investor for a 2 or 3 year time frame. I want to make the bull market as easy as possible on myself. And I think another one's coming after the Bitcoin halving. And yeah, like just to be clear, I'm going to have a trading account. I'm always going to trade because I like to navigate. I want to try to boost my returns. I think I've got a pretty good grasp on things, but I mean, you got to know when to trade and when to invest. Because I will just say this one more time, because I truly mean this. I don't think really anybody is going to outperform a Bitcoin parabola or a Ethereum parabola or an altcoin parabola when it happens. You're just not. It goes crazy, Make it easy on yourself. Give yourself dry powder.
Well, Max, you gotta have a trading account for some coin margin longs, brother.
Oh, of course.
That's what you need the trading account for. But
or coin margin hedging, because then you can just hedge your spot bags,
Exactly. But unironically, now is not the time now is the time you have to be paying very, very close attention for sure. And it's unfortunate because we've all been staring at the charts very intently for the last year and a half since the top, basically. So I'm ready for relaxed throw it in a ledger in a safe, easy mode again, but we're not there yet.
Yeah, the thing is too, I think a lot of people think that traders are just trading the whole portfolio. Like I have a portion of portfolio that's 401k, some of it's IRA, some of it's stocks, some of it's crypto, and I actively DCA those, right? Like I'm not even selling those positions. But I have a portion that I trade too because I'm trying to improve on my DCA positions. So when I win trades, I like to move that liquidity typically over to long-term DCA positions, and that's basically what I'm making money while I'm making money, and I'm making money while I'm losing money. So it's a win-win for me, and a lot of people don't understand that. You can lose on a trade, but win on, and this is again hedging, right? And this is why a lot of traders don't win because they don't know how to hedge, and that's usually the biggest loss for a lot of traders. They want to only go long or only go short. They don't understand that you can go short and you go long. Here, and I can give you another example, right? JP Morgan. They have, I forget what it's called, but I think like every month or 2 or 3 months, even though they're buying actively into the S&P, they short it. They short it. And they short it as a hedge, right? It's not because they think the market's going to come down. They take a position where they think that there's going to be a drawdown, and then they're going to short the market while they're actively buying into the market. And that's to hedge their positions because they know certain levels of liquidity are going to see resistance and they want to be able to hedge the downside. And so they short the market based on that. And if they lose, they lose. They win, they win. This is one of your biggest money managers out there. I mean, if anybody could tell me something bigger than JP Morgan, I mean, there's a couple, but not many.
Tommy's portfolio might be bigger than JP Morgan.
No, man.
He's our in-house porpoise and Marin and VP of operations.
Yeah, no, I agree.
Fantasy football expert.
Risk management is very much important. Very, very, very much important. And risk always goes in both ways. That's the part that people always don't remember, right? They like to think up only, but risk always goes in both ways. So I might scratch one.
I don't know.
Till the
but the mystery of knowing what Evan's going to scratch made me put that up there.
On the 5 minute, he said.
I love that Evan is actively just scalp trading this right now while on stream. It's awesome.
The Fedor.
Looking good.
Evan, what are you in right now, brother? Scalp short again. Interesting.
Yeah, I mean, I've been posting my stuff just so people can see that I'm not LARPing. Like I've literally been posting on Twitter, like, hey, bought this, bought that. Like I'm actively buying into the market.
I also noticed that you're you subscribe to Coinbase Pro or whatever, right? You get your zero fee spot trading wheel, right?
On like 10,000 in volume, right?
That's right.
out the 10K, yeah.
Will's milking that subscription, man. That's why he's buying.
I gotta buy 10K a month.
Will's the dude that's like, oh, I'm gonna buy it because it's on sale, but doesn't realize he's still spending money, even if it's on sale.
What is it, like $360 a year? $360 a year.
I don't even know.
Well, if you look at fees on 10,000, it's probably more than that.
Coinbase, I think they take a couple percent normally. That seems like a lot. Maybe 1%.
No, I think you're right. I think it's pretty high. Yeah,
it's kind of a lot. I use Coinbase to onboard though. Like I like Coinbase, but I mean, it's you kind of pay a premium because it's not sketch, honestly. So I'm fine with it. You know, they're a good company. I'm rooting for them. I'm happy to pay for a good service.
You can get 25K on through PayPal without getting held. So if ever you're trying to onboard like decent size liquidity or a little bit of liquidity, like you can get 25K in one go and you can move right out their platform.
There you go, Evan. There it is. There's your scalp short, brother.
I haven't ever used Kraken. I'm not gonna lie. I don't know if you guys used Kraken.
I've used it a couple times.
I like Kraken. They don't have ACH transfers anymore because the feds took it away, I think. But if you can do wires, they have better withdrawal limits than Coinbase actually. So I almost feel like more safe on Kraken than I would on Coinbase.
I like Coinbase because they're publicly traded and I can actually see I can see what's behind the curtain. That's the only insulation that I feel with Coinbase over any other exchange.
Yeah.
Trust in Brian.
Trust in Brian, brother.
Speaking of trust, there seems to be a whole lot of trust in this curve support. I gotta say, because nobody's talking about it.
Let's see it.
It is a little bizarre. No one's talking about it.
We're getting close. We're getting close. Boys.
Very bizarre. What can you do, man? We're gonna find out whether the market actually cares about this stuff pretty soon, because it's gonna have to care if we trade below 40 cents.
Well, I told you guys, like, look, I'm not shorting anything till Bitcoin violates 25K. It's just not gonna happen. Not in crypto. Bitcoin violates 25K, I'll start shorting things. But like,
Asia's gonna nuke it while you're sound asleep, man, and then you're gonna have to short 21.
Nah, I ain't short 21. Because of 21, I've lost it.
You don't want to be the supply, Will?
Nope, no way.
But look at that thing.
I know the difference between being exit liquidity and actually exiting liquidity.
Will, what probability would you attach that we go to 23.8 before we move up again?
I've already told you guys that we hit 25K. We're going to like 19.9.
Wait, did you guys see this? We need to answer this question
in between.
We need to answer this question, guys. What happens?
What happens if
can I actually?
You don't know for sure. Let me just say that.
Can I answer the question?
Where's that liquidation at?
I'd like to answer the question by.
Well, you got to raise your hand, Max. You got to raise
your hand.
The classroom.
I'd like to answer the question by changing my background.
Oh, no.
That's what happens. It's ogre.
All right. The fundamental response, if curve goes below 40 cents,
that's the fundamental.
This is the fundamental answer. What's wrong with you?
Look, it's all part of the analysis, guys. It's all part of the analysis. But when curve's over the counter price, that Michael basically sold part of his supply so that he could lower his essentially his liquidation price, his loan to collateral. But 40 cents was the price that the people who bought it off of him got it from. And it's technically vested, 6 months from when they bought it, but it's not actually vested, so they could sell it at any time. If it gets below 40 cents, we've kind of been posing the question here on this show for a while that do all of these parties who took on over-the-counter exposure to save Michael, the Curve founder, do they continue to hold on to it if we dip below that over-the-counter price? Given that if you go to Michael's liquidation price, which is about 30% below the over-the-counter price, it basically goes to zero. So it's almost kind of like a fun little thought process in game theory here for how these larger entities could manage this position. It's in a very precarious spot right now, though, in my opinion. And so we've basically been saying that 40 cents is the unofficial liquidation price. I stand by that. I still think it is.
Yeah. Yeah. Because I mean, you're betting on if it comes to like, here, you're just betting on, if you bought here, you're holding, betting that it won't come down here. And that's just not a bet that some savvy crypto OTC buyer should take. Like, I don't know.
They did it to save DeFi. I can only imagine, because they probably have some pretty aggressive exposure to stuff that would be impacted if Curve were to get hit like that. I'm sure everybody does. I mean, Curve is like the stable coin. I'm not going to act like a ton of people use the protocol right now. No. But during the bull run, I would imagine there's probably still some residual leverage left over that directly came from Curve. So it's like one of those things where you just don't, it's never good when you open up under the floorboards and see the type of hidden leverage in crypto. And this could be one of those instances.
I just never understood why he would go and take how many multi-million dollars of loan did he take out?
60 million, maybe.
Yeah.
$60 million loan against this project to buy a mansion in the middle of a bear market.
called diversification, Will.
Like people are investing in this. Like if somebody did that, I'm like, I'm selling my position. I'm out. I'm like, come on, man. Like if people are looking at this guy as a serious project at this point, like I don't know what to tell you.
Yeah. I mean, when you basically 5x, because that's what they did to save Michael, they basically 5x or 6x to the entire circulating supply. It's vested, vested.
Dilution. That's what that is.
Vested. You're basically saying your token's going to zero when the vesting is over anyway.
Yep.
So the funding just seems weird to me on Curve. You can get paid to me to short an asset that's probably going to be at zero in a few months anyway.
Yeah. I haven't looked at the funding.
It's been positive perpetually. Like
if you're betting on Curve, like I don't know what, I can't save you. I just can't save you. Like I'm serious. Like look, I've been bullish the whole year, but like that's just one thing I fundamentally cannot get behind. Is the Curve is the biggest joke in the space right now. $60 million loan, 60 on a project in the middle of a bear market. Blows my mind.
Yeah, dude. Curve is, I mean, it's negative on DYDX, but it's basically positive everywhere else. Wow.
It's baffling. I'm not gonna lie. It's very baffling. Like, because if circulating supply really did 5 or 6x, they're gonna dump it as soon as the vesting is over.
Well, isn't that diluting their overall capital too? Like that had to have brought you down 5 or 6x capital with that type of dilution. You know what I'm saying?
What do you mean?
So if you increase circulating supply, you decrease value of token.
Right. Yeah, that's what I'm saying. Like, I mean, they basically have it's a self-admittance that the token is worthless to me. So
they diluted their holders is what they did. Now, hold on. Does that 5, 6x, does that split evenly amongst all holders?
I mean, he over the countered to a lot of different parties, so it's spread out. But some of the actors, like Sifu, is one of them. The guy who he rugged Quadriga, and then he got caught in the whole the Danny coin mess. Yeah, he's one of the guys who got some tokens. Oh, hey guys, maintenance is here. I got to run.
Okay.
All right.
Interesting.
Maintenance has arrived.
I don't know, man. Like I think like it could survive, but like the reality is like it's not something I would put my money in.
I mean, let's just zoom out a little bit.
I wouldn't put your money in it, Max.
I mean,
thanks, Will. I appreciate that. Will's like, I wouldn't put my money in it, but Max, I'd put your money in it. That's fine.
Oh man,
it's a hedge as long as it's not my money.
Let's look at like total crypto market cap, Tucker, if you would be so kind.
Which total would you like?
Let's just do the true total, man.
The true total.
Total. Yeah. Let's take a look at total.
That does not look good though. But I will say, like, this is one of two patterns. All right. One, it's the bottom where we rolled across it. Or two, this thing is going to get destroyed.
This kind of looks like we're about to see like a 20% down candle, just like straight down, not even a slide, just like somebody just rugged it.
Look at that. I see it, but dude, I mean, you can't. That looks like an inverse Bart hardcore, does it not?
Can you flip the chart for us, Tucker?
Yeah, I was gonna do that.
I mean, that looks like it's loading a God candle right there.
Yeah, it is slanted. It is slanted up a little bit. You'd want to see it either flat or kind of down to see the bar.
You do have the lower high though, too.
You kind of want to see this, and then
But here's
the thing. Kind of loading a God.
That's candle. Loading a God candle, man. That's
Here's the thing, Tucker. So I would say if you move that line up. Move that, yep, right there. You have to violate that. That's almost your guarantee that price is going to break, right? And this is why, like, I've been adamant about that 25K zone for Bitcoin because it's very similar. You have to violate that. I mean, even if you wick below it and pull back above.
Wait, hang on. Look at that one, man.
That's still good, right?
Look at that hammered.
Well, yeah, that's a trend hammer. It came up, hit trend,
that's a tough break there, man. That's really tough. I mean, dude, truthfully, I think we go below that March low there, Tucker. The March low
here.
Yeah, because there's some inefficiencies from earlier on this year.
Well, that's your.
I would like those cleaned up before next bull market, and that's not even a doomer outlook. Like I think we got to clean that up a little bit.
Yeah, the weekly. I'd like to see that the mid of that one taken.
Yeah, I'd like that. There might be. I'll pull it up on my end. There was
you could roll up though, like he's saying though, Max, retest trend and then roll over. And what I would say,
we did retest the trend.
No, I mean again.
Why would we retest it again? What's going to say, dude? If the grayscale news couldn't even get us above that, we distributed, and then that little scam BART we had last night couldn't even really get above any significant levels. I don't see what's going to be different about it. I mean, anything can happen, but it's like what are we talking about here?
I would tend to agree. All right, but we got a slow moving downtrend. And go back to the time frame you were just at, Tucker, real quick.
I like this line better. The 3-day or the weekly?
The weekly. So see how your trends is like slowly bleeding into support. Like you got to be cautious with that because they could roll that up before they roll it down. Like you don't want to see slow bleeds. You want to see this thing either trend sideways or trend up, right? An uptrend is almost a guaranteed you're going to roll over.
I know.
Sideways trend is almost, but you're bleeding into support.
I worry that we're like here.
It's too much time though. Look at the time up there and look at the time where we're at.
Hang on.
And guys, real quick, this is very important to remember. Is that we are only at 33 likes on the video. Damn, I was thinking we were going to be less than that. That's actually pretty good, guys. Thanks for 33 likes. I don't know. I don't even know if I feel comfortable asking for more. Someone just liked it. All right, we're going to leave it there. Never mind, guys. I wasn't looking at the likes live. Thanks for all the likes. Thanks for supporting us. Would be great if you haven't liked the video yet. Please consider liking. It really helps the channel. But sorry, Will, back to you. I didn't know we had so many likes, man.
No, you're good. So see that little veer up you got there, Tucker, on the left? Yeah. See how they came down into support and then rolled up a little bit before they dumped?
This green candle?
Yep. That's what I'd want to see. I'd want to see them try to roll up first before I'd take a short. So they might get up to there, but you want to see those bodies start to float upwards. If you start to see them float upwards, you're going to probably roll at that point.
God, dude, this is just driving people insane.
There's nothing to trade here.
We're in May and June of last year, guys. It's that simple. We're in May and June of last year.
What, here?
Yeah.
Every big dump, though, I want to point this out. Every big dump has resulted from an uptrend. Right? You have to go up before you come down. You have to believe. You have to create the false.
The false. We did. It was the grayscale one, man. We did.
Hold on. Well, that's different. That's just creating your exit liquidity. But now you have.
No, that's what you're talking about. That's what literally what you just said was go up before down to generate exit liquidity.
No, I mean now where we're at. We
already did that, and we tried to do that last night.
We're slow bleeding now. We
did try to do that last night. Look at this bullshit, dude. I'm sorry.
No, I know that was definitely a bar.
Did you see the timeline last night when we were at 26.2, 26.4?
I didn't even look.
I already knew. I knew it was gonna go arrogant last night when we were up there, man.
I told you.
Arrogant.
Oh man.
Unbelievable.
Well, I mean, again, I'm still bullish about 25, but like I still think that 25 gets violated. I can see it happening. I'm not at all gonna try and deny that that's not a thing.
I just think that the attempts that we've seen so far to climb us back up to retest 28, 29, it ain't there. Even with like strong news catalysts, it ain't there. That's why I tweeted that little meme. I tweeted that Tucker, any chance you could pull up my Twitter and just to get that meme?
Yeah.
I made it on Snapchat. I'm not much of an editor.
I have to run real quick, guys. But no,
wait, Will, stay for the meme. Stay for the
meme, Will.
Stay for the meme.
All right.
Okay, wait, hang on. I got it.
Let's get the meme up.
Okay.
Look at these little pathetic Barts, man. Those Barts are to the upside, man. We've had 3 Barts to the upside.
No, 100%. Yeah. That's a liquidity trap pattern, is what that is. I get it. I'm not at all saying that. I'm just saying that the bleed will probably veer up one more time before it rolls up.
Scroll down. Right there. That's the tweet. Pull that up. And then we tweeted about a spot ETF, so they'd long 25K support again. Bro, that's the truth. Look at these guys. Look at these old codgers, man. Look at them.
Yeah.
It's funny you see like the 18-year-old gurus. I've been trading for 1 year and I've already got $100 million portfolio. And they're trading other people's money.
Favorite picture.
Huh?
Thanks for the like, Tucker.
Of course.
Bro, when this thing gives out, like we are within 72 hours of absolute carnage, you know? It's not going to last much longer.
Let me present you a little bit of a different perspective. Let's say we go up to like 27.2 again. What's your thoughts on that?
Hang on, let me just switch it to window. We go to 27.2.
What would my thoughts be? Well, for one,
what would your thoughts be at 27.2?
I have more short orders there. I'd be filled and I'd be happy.
There's 27.2.
I've got a bunch of orders placed at strategic spots.
What would your thoughts be if we went up to 27.2, rolled back to 26.5 and held?
My thoughts up at 27.2 would be short the piss out of Bitcoin.
You starting to see what I'm pointing out there, Tucker?
Huh? Wait, sorry, I'm trying to find that.
But the context of it is what matters. It's like
held this.
Yep.
What would you do here?
Yep.
But see, then you're talking about time-based invalidation on the short play more so than anything. Where if we're still end of September, grinding up to 26.5, we're not going to nuke anymore. It's that's a time-based thing.
That's what I wanted. That's what I wanted for the audience. That's what I wanted to throw out there is time-based capitulation.
Here's your time invalidations right here. September 23rd.
We got to go down this month.
It has to be this month.
It's got to be it's got to be soon this month. I would go as far to say within the next week it's got to happen. Otherwise, it gets a little bit confusing.
If we get through September somehow and not nuke, I think we're gonna rip.
That's what I'm saying. I wanted to throw it out there. I wanted to throw it out there so the audience knows, like, we're not trying to be biased to the downside. Like, we understand when the market has potential to rip the other direction.
Because what are we off the highs right now? Nah, not gonna cut it. Well, here, no, we gotta go lower, man. I'm sorry.
I'm not saying that lower can't happen. I'm just saying time-based invalidation can happen.
You got to get at least
CME gap, brother.
You got to get at least 25% correction, I think, before the halving.
CME gap, brother. We're not leaving it.
Yeah, we're
right there.
I will say
not leaving it.
I want to point out too, because I think a lot of people think you just go halving and straight up. Like it's literally 6 months after that. Like this is like the 2020 thing where everybody thought we're gonna have a pre-halving bull run, and then they thought we were gonna have a bull run directly after the halving. No, we didn't have a bull run until freaking 2021. Well after the halving.
Yeah,
after the halving.
Dude, the best time to buy Bitcoin, like low key, is after the halving because the opportunity cost, unless you can snipe the bottom on a dip, I mean, the opportunity cost of positioning too early. You want to position yourself not necessarily at the bottom. I mean, if you can, that's great, right? But you want to position yourself when you're closest to the expansionary period or potential expansionary period. All right, see you, Will.
All right, see you, Will. Yeah, you want to buy things when you think they're going to go up.
Not just because you think you bought the bottom, because you could have bought the bottom and you might make 20% quick, and then you might have to wait 2 years or something. You don't really know. So people always ask me like, "Oh, when are you going to go back in heavy spot?" And I'm like, "Well, for one, I'm going to try to knife catch a little bit, just for the fun of it, man, just because I love the sport." But I'm planning to like seriously position more based on time than anything. I want to buy as close to the halving as I can, where there's as much where there's as much confluence with certain technical factors and maybe on-chain things that I'm watching. Um, so yeah, I mean, I'll try to buy as close to the bottom as I can because I'm also a trader. But long-term positioning, this isn't the time to aggressively position yet. Hey, look at Tucker. Walk us through this, man. This is it right here.
Yeah.
This is it.
So
Right after the halving is when you get the expansions, not 6 to 12 months before.
I put the white lines where we really started going up only, and I just kind of eyeballed it. But I mean, it is about 6 months after. This one was pretty close, but
Well, it actually looks like after each halving, that time the white line gets pushed back ever so slightly.
exactly.
You know?
Yeah, it's getting longer. That's the lengthening cycle theory, right?
So maybe we would be looking at like summer of 2024.
Yeah, we'd be looking at, I wonder if up only, yeah. So I really went deep on this one a while ago.
I mean, I'll position before 2025, but also like I think what you're highlighting makes perfect sense. But I mean, I'll be in pretty heavy well before that, in my opinion.
Yeah, because it was, how did I do this? It was like from the halving to when we started going up only. It was like, I think it was doubling each time is what it was doing basically. So if we took double 162, so we went to 324. Yeah, 324.
Oh, that's interesting.
From the, just do it like this, 324. Yeah, so basically that would give you February, no, yeah, 2025 is when we would start going straight up in a straight line.
But of course, important to mention, in theory, we could still be 100% off of a local low.
Yeah.
Like a local bear market low before the halving.
Yeah, like this one, obviously we were going up after the halving. This actually is the only one that we dumped post halving, which would be pretty crazy.
You know what I'm very interested to see how this plays out, Tucker, is, during times of uncertainty, historically, when we've had recessions or economic turbulence, commodities have done well, for periods of time, specifically something like gold or even silver. Bitcoin, by many, is viewed as a commodity. Some people don't view it like that. I would say I'm about 80% of the way there towards viewing it as a commodity. If we actually do end up getting the highly anticipated recession sometime around the Bitcoin halving, maybe we're in the midst of like an equity recession.
Mm-hmm.
I'm curious if Bitcoin would decouple. I don't even like saying that because it's used so loosely.
Mm-hmm.
But I wonder if Bitcoin would actually trade more like gold during a recession rather than, a high beta play to the upside or I guess downside to equities, which is kind of how it's been trading recently, is just like the ugly redheaded stepchild of TradFi, where it's highly dependent on liquidity conditions. And it really hasn't, I mean, it's had an okay year, right? But for Bitcoin, not really. So my thought is, maybe if we are in the midst of a recession, is this finally when we get the decoupling? Because Bitcoin's never existed during a true recession. So if we do get it, what do you think the probability attached to Bitcoin trading more like a commodity rather than, a 3 or 4 times leveraged S&P 500 or NASDAQ ETF is?
I mean, you'd have to have, it would be tough, I think, in the next cycle, like in the fourth halving. I think it'd be tough because you're not going to have boomers getting on board with that at all, and they still control a lot of the money. But I think if you're talking like, if we want to talk about the cycle after next cycle, I think that's where you could get that. But I think it's probably too soon. Like, I think you need the infrastructure in place, like spot ETFs, different products like that would make it easy for people with money to invest into Bitcoin. I just think we're close, but we're not quite there yet. So, I mean, I think it'll still trade risk on, but and I still think it'll have like a full bull market. Like it might be condensed, but I think it'll still have a bull market just based on the assumption that global net liquidity will increase to either like front run a recession or to like save us from one that's actively happening. So the timing is going to be difficult, but yeah, and I don't know where I pulled that data on where I put the peak on there. I'm not sure exactly where I got that from, but that would put the peak in 2026.
Yeah, I've got some very like they're kind of like voodoo analysis on where I think Bitcoin could peak next cycle from a time-based perspective, but we don't have time to get into all that today. It's
Yeah.
we'll have we'll plan it out and we'll do like a wild speculation day for the next cycle. But yeah, I mean, I really like that. I mean, dude, there's so much confluence at that like 19 to 21K level for a potential bottom before the halving. I think the one big asterisk or contingency for me is one for Bitcoin to not make a new low if we are going to get a recession in TradFi. In my opinion, Bitcoin's going to have to decouple and trade like commodities. I think that gold and silver can potentially basically be entering a super cycle or have a really serious run over the next few years. And hopefully Bitcoin joins them. Hopefully ETH joins them rather than just trading like ARK ETF or something like that just simply doesn't have any demand right now with these conditions. But assuming that Bitcoin does end up trading like a commodity, which is a big assumption, but again, for right now, let's just assume for the sake of the argument. Tucker's analysis here, like the average drop before a halving is what, like 30 to 40% from the local high or the high of that year prior.
Yeah, I had it all. I'm not gonna put it all back on here, but yeah, it was like it's about I think the lowest we had was like 32. So basically 30 to 50 is really what it was. Cause like in 2019, we dropped 50 before COVID, right? Like we dropped 53% without COVID. So, you're talking anywhere. I mean, 50% from 32 is obviously 16. So that'd be a double bottom, but I'm thinking you come anywhere in like here. I think that's your zone, really. You got these wicks. I mean, I guess you could pull it all the way up to the CME gap, but
yeah,
that's your zone, man. I don't think buying up here is the move.
So assuming Bitcoin ends up trading like a commodity, if we do get a recession, that's the zone.
That's your zone, man. Like you just want to see this hang out for the halving. I mean,
man, I'd like a little bit of a recovery into the halving. I'd like us to be well above 25 or 30K into the halving because I think the strain, the stress put on miners, if we're that low going into the halving, will be extremely difficult.
Yeah.
I mean, they're going to be producing, they're going to be, I mean, their cost of production is going to be 30 to 50% higher than the actual underlying value of the asset. So,
yeah, that's tough.
Yeah, I don't want to see that. I mean, if it happens, it happens. Like, hopefully they're preparing themselves, but I don't want to see that happen. I think that'd be pretty difficult. So,
yeah.
All right. We've been going for an hour 10. Let's call it here. Get on with our day. Guys, thank you so much for being here today. This is Market Check brought to you by Because Bitcoin. We go live every single day between 10:30 and 10:50 a.m. Eastern time. So if you are new here, please consider subscribing to the channel. Again, we go live every single day. We work very hard at this show. And yeah, thank you guys so much for being here again. Really great audience on a Friday. Thank you guys for all the likes. It looks like we ended at 43 likes while live. That's really good for us. Whenever we can run 40, that's fantastic. Now, if you want a more intimate approach on how we trade and you actually want to trade with us, we have a really kick-ass Discord. The link to that is in our bio. You'll have to go to our website and sign up. We are offering a free trial of that as well. So yeah, that's been growing as well. We've been taking a lot of really awesome trades in there. We share all of our positions in real time and additional analysis, some of it which we try to keep separate. So the we call them Giga Chads, the people in our Discord, the BB Giga Chads. So they get premium analysis with positioning and alerts and stuff like that we don't share here on YouTube. So if you want a more intimate approach and a more behind the curtain look at how myself, Tucker, and the rest of the Because Bitcoin team trade, give that a look. But guys, thank you so much for being here. Have a great weekend, and we will see you guys Monday. Stay safe and take care.
See you guys.